name's Tanea McKeel. I'm a reporter at Cheddar. I cover fintech and crypto. I previously worked at CoinDesk and American Banker after that, actually. So joined American Banker in about 2015, which is when I started covering banks, and about the time that banks started discovering the word blockchain. And I've worked with some of these guys in the past, just trying to unearth all of that. So I'm excited to do this panel today. I'm gonna have each of you do short intros of yourselves. Yeah, let's start with you, Jorge.
Okay, so hello everyone, I'm Jorge Lesmes, and I'm the global head of the blockchain banking practice for Everest. Everest is part of Entity Data, huge Japanese conglomerate. And my mission, my role is to oversee the different projects that we have going on in around 29 different countries, around 300 people in our blockchain teams, where we are taking either technology from our partners or internal assets that we have created into our banking clients, insurance clients, and industry clients. So pretty much focus on taking the technology, finding a good use case, and implementing that technology for our end client benefit.
Lior.
Yes, I'm Leo Glass. I'm the global blockchain lead of BNY Mellon. My role is to get out there, figure out what's going on in the industry, which use cases are relevant for us, bring them in, educate the organization, because this is still important part of any blockchain role, and then figure out how do we engage, how do we take those use cases, and do we move them on the path to production? Is it still just going to be an exploratory process? And what do we want to get out of it? And then what's the best way to go about it?
My name is Oleg Abdrashitov. I'm the director of Blockchain Laboratory for Sberbank. Sberbank is the largest bank in Russia and in Eastern Europe. We're 20 strong, mostly developers. We build solutions on DLT for the bank or for our clients, mostly for trade finance, capital markets, supply chain, and of course we do a lot of research in DLT.
Good afternoon. Thanks everyone for coming after lunch. Hopefully we can keep you awake in the after lunch lull, which always happens. My name is Mark Smith. I'm the CEO and co-founder of Symbiont. At Symbiont, we have developed a novel and purpose-built enterprise blockchain and smart contract solution that is designed specifically to solve the problems we find in financial markets.
Okay. And also want to put it out there that we'll be doing questions at the end for 10 minutes, so think of those now. In my experience, it has seemed like the focus on DLT in banking has always been more about improving inefficiencies, cost cutting, discovering new technologies versus generating revenue. Has that changed in the last 3 years? How much of a priority is revenue focused today?
I would say 100% is revenue focused. I mean, nowadays, the IT spend on technology projects is pretty much focused on what I'm going to invest and what the revenue is going to be. If there is not a business case, banks will not go through blockchain or DLT implementation. You have to think about how much money is being spent just on resolving regulatory-driven projects, and that's the main priority for banks nowadays. You have to think about the IT budget of a bank. Around 50% of it is spent just on keeping the bank running, 20% on around regulatory projects, 10% on cybersecurity. So what we are fighting for here is something like 5% that is spent on innovation, and I would say half of 1% that is spent on blockchain and DLT, and they will put a lot of thought into, will this bring me a real benefit and a real business case for my organization and my clients, and if not, they will not do it. I guess it all depends on the level of maturity of the different banks involved with this technology, but the ones where we are implementing the technology in production stages, pretty much, if there is not a business case, they will not go through it. They have already gone through the experimentation phases, pilots, POCs. That was 2016. In 2019 is pretty much, can we go in production with this, yes or no? And if it's yes, let's bring the Excel spreadsheet and see if we are going to win some money with this.
So are you saying that we're beyond POCs,
Of course.
but not yet in production?
No, we are in production, definitely. I mean, you only have to look at Santander, for example, amazing guys on the innovation space. They put a Ripple-based solution called OnePayFX, and that's pretty much in production, a very tangible use case where the technology is being used. You can look at BBVA doing corporate lending over the Ethereum network in production. They did a 100 million corporate lending to a huge company in Spain, and that's in production. You can look at NatWest putting in production Finastra-Lender.com with the amazing technology of Corda. So that's our reality in 2019. That's our reality.
What do the bankers on the panel think?
Well, so I would say definitely cost reduction is important, and it's important for us, it's important for our clients, it's important because there is this compression in our industry of profit margins. But the bigger discussion is how is our industry changing? And so BNY Mellon, we look into the things we're doing, and we're asking, okay, in this new era of fintech, which blockchain plays a big role in, how are the services that we are providing are going to change, and what new types of services are going to be out there. There was an announcement, I think, 2 weeks ago about us doing the cold custody for Bakkt. And this is an example to a revenue generating business that did not exist before blockchain, right? So there is this portion of new revenues. Cost reduction is important. And in addition, there is this question of if our industry is changing, and let's say major exchanges are implementing blockchain in 5 or 10 years, and if you don't adjust to it, and if you can't support it, you will still be able to interact with those exchanges. They will still have the traditional interfaces active, but you won't be able to reap the benefits of using blockchain. And that very likely will make it very hard for you to be competitive, right? So we have to look into that reality of 5, 10 years from now and figure out what do we need to do today to adjust. So that's the third component.
Do you guys have anything to add?
We at Symbiont, we don't take opportunities unless they are at a minimum combined efficiency and alpha play. No one wants to be in a business in which efficiency is the only game, because that becomes commoditized. When that becomes commoditized, it's a race to the bottom in price. And then pretty soon we reach perfect competition and no one wants to be there. So this new tool set, this new blockchain smart contract tool set, opens up the opportunity to actually look at those two things simultaneously. We can create new instruments. Financial engineering using technology is now a huge opportunity, and finding ways to bring old types of securities back that may have been shelved, like RMBS and CMBS, in a new way that is transparent. Being able to simultaneously solve inefficiencies that lead into the creation of that instrument is extremely powerful. So we're seeing a big focus now away from POCs and pilots and ideas and aspirations and into real problem solving that leads to real revenue generation.
I guess, how far away are we from that revenue generation just being a mass cross-industry thing? I mean, we're here today to answer the question, how deeply has DLT actually penetrated the financial services industry? So you've all given great examples, but yeah, can you answer that question? How would you quantify progress?
Very small, almost insignificant at this stage, although pretty much everyone in this room would want me to say the contrary. But the reality is that for banks nowadays, blockchain is the lesser of their problems. Again, regulation is the biggest problem nowadays. All the money that is spent on regulation is the real issue that retail, corporate, and investment banks in Europe and in America are most worried about. So whenever I get this question in this kind of panels, like, is regulation an opportunity or a threat for blockchain and DLT? I always say that I dream about the day when I will wake up and I will read some piece of news saying that the FCA or the Bank of England says that you have to solve this specific use case with blockchain and DLT. That would be amazing, because suddenly blockchain and DLT will be put at the top of the list of the bank's needs. But at this stage, the reality is that once you get into that spending that I was talking about, like keeping the bank running, cybersecurity, regulation, innovation, even in innovation, you have things that are more mature, like big data, like RPA, like IoT, and we are fighting that fight. So as much as I would like to say that blockchain is the key focus for banks nowadays, and that all the C-level is looking at it, the reality is that they aren't just yet. But the future is promising, and I believe that the technology can solve a real use case. But they have to figure out other problems that are bringing much trouble to their organizations before. That's the reality. That's what we see, because we are pretty much hands-on inside the banks and know what their problems are.
It's sexy announcements about a lot of banks doing a lot of things together. That's fun. But in the reality, the hard part is just starting. Most of these happen in innovation labs. So these are in the cloud, and it all worked well. But then when you want to go into production, the reality of InfoSec and DevOps and infrastructure and installing and how these things truly work and the systems they touch inside financial institutions, which are so precious and have to be handled so cautiously, the majority of this ecosystem has never experienced that. And when they begin to experience it, many of them fall down flat. And so the chasm that was crossed previously, which is this an important technology tool that will solve problems? Yes. The answer is now yes. Now the second thing is, can it get actually implemented in a primary production environment that will lead to usage that will then lead to value? That's the question we're answering right now. So yeah, very small production deployments that mean something, and with aspiration that these things take a long time. For this to be ubiquitous infrastructure, it's a decade, easy, if not more. I mean, think about matching technology. It took us a decade to electronify exchanges and marketplaces, and that's a much simpler and easier to understand technology and much more straightforward path. There's many more twists and turns to be had when you're dealing with these interbank systems, the core systems of banks that these technologies will touch.
I think it's a very good point, especially when you mentioned decades that it took to build the infrastructure for capital markets in the US or in London or in Europe. So to answer your question, how deep is the penetration of DLT? I think it depends on the market. In countries like Russia or in Latin America, or in countries where markets are yet maturing, where infrastructure is being built, we have a much bigger chance to do it right and to build it on DLT. So in our work within Russia, we have a much bigger chance to, for example, to build the entire mortgage lending infrastructure on DLT, and that's what we're doing, just because we're at the, let's say, at the beginning of our path.
Mark has pointed out the real issue that we are facing nowadays. I think that we are at a stage where the discussion is not that much about which platform should we use. Again, coming back to the example of Corda, these guys have cracked most of all the exotic use cases that banking clients would need to take care of. The problem is, how do you take their technology and you implement it, you integrate it within bank's core banking platform? That's the real issue, and that's where companies like Everest and Entity Data can bring some value to the chain. You have to remember that traditional banks, legacy banks, are running on mainframe and on 1970s technologies. So what we are trying to do basically here is take a Ferrari 488 spoiler and put it on a 4T.
Well, so if I can, jump in on defense of the banks.
Sorry about
No, look, I mean,
but that's the reality.
don't get me wrong.
IBM mainframe is running your bank probably.
I'm not arguing with the infrastructure thing, but I will add this. Look, I remember that like a while ago, I was looking into a use case that was around loans, like home loans, and there was tons of papers involved. There was like, warehouses full of boxes and millions of documents, and for me as a technologist, that was like, oh, it's pretty easy. Let's just digitize the whole thing. And, what's the problem? Turns out the problem had nothing to do with technology. The problem was regulatory. Some states require you to have a paper copy of your house loan. And so no matter how good is my technology, I will still need my warehouses there until that regulation changes. And my point here is that we are talking about one aspect of DLT, the technology aspect, but there are many others. And for example, we're talking about tokenizing securities. Well, what is the legal status of tokenized security? Can I register it on a blockchain? I don't know, but until that is resolved.
Yes, you can. If you're incorporated in the state of Delaware, we changed the law to ensure that, in fact, a blockchain can be the sole share registry for the in perpetuity of any instrument issued. So the answer to that is yes.
But you see my point, right?
Yes, no, absolutely. But I agree with you 100%, and you got to change those rules.
And the last thing that you need is the cash lag.
That's
Once you
right.
have a stable
That's the
coin,
big problem,
then,
right? That's the big
then
problem.
the real
And-
disruption will come.
And I want to another point I want to make in that context is that, yeah, we're going into those conferences and we're seeing all those shiny POCs and all those great user interfaces. And it's like, oh, okay, the technology is here. What's the problem? What we're not seeing is all of the discussion, not seeing a lot, or maybe it's not that interesting, all of the discussions that take place with the regulators. The SEC just came out with a paper requesting information around custody on blockchain. So, those are important part of the process. Until those are resolved, we won't have, full-scale production.
The thing that I agree with you, but again, I think that there are different levels of understanding of the technology, and if you are very hands-on with the technology, I agree that that might be an issue on the academic approach or the academic stage of DLT. But again, I've met with almost all the tier 1 banks in the world, and not just once they have told me, Jorge, should we be using tokens for this and that? That's not part of the discussion yet. So I agree with you that we have to think forward and think in state of mind, thinking that might be an issue in the future. But nowadays, as of May 2019, that's not an issue because they are not even remotely thinking about using tokens.
Lior, what does it mean that you're the global blockchain lead at BNY Mellon? Like, what is driving the innovation through the bank, and who is standing over? Is it you? Who's standing over everyone, saying we have to, be in this blockchain space?
I'm just, a guy, and I'm more of a connector. So my job is to be out there, and figure out what's going on and bring it back inside. I have a few projects that I manage. I'm on the board of the EA. But it's a group effort. We have people all across the organization that work very hard, and some of them don't even have blockchain in their titles. But it's not for blockchain to be successfully adopted, you need people that are passionate about it across the organization. We have people in the different lines of business that are doing that on top of their day job. That is demanding enough as it is. We have technologists looking into that. We've just hired head of blockchain. We have the innovation centers. And in the end, there are all of those different groups. And there is an effort to kind of figure out how is everything fitting together. And more importantly, we're talking about blockchain, but blockchain it's not a standalone, right? It's part of a bigger trend. And maybe we're looking out there and we are seeing a problem, and maybe we shouldn't solve it with tokens. Maybe we should solve it with AI, right? So it's another area, but then we are not going to drop it. We're going to, hand it over to another team that deals with AI. So there is this, I would say it's a decentralized effort.
Who is leading this effort across the industry? I think the word disrupt, which is in the title of the panel, might be a little bit dramatic, but is it the banks that are disrupting themselves? Is it companies like Symbiont?
The banks aren't disrupting themselves. Some are enabling themselves and empowering themselves to do new things, and some are trying to resist the trend. There's not a wholesale disruption going on inside banks. Banks are caught in the innovator's dilemma, and they're making independent decisions, right? So, and even more micro, in certain areas where there's an opportunity, banks are engaging. In other areas where maybe there's a lot of profit margin, they're staying away from. So it's as Lior said, this is one piece of a bigger puzzle that includes machine learning and AI and other types of improvements in underlying stacks for banks to, and the unbundling of banks, right? That's also part of this conversation. So from Symbiont's perspective, we also don't call ourselves disruptors, right? We call ourselves enablers. We're here as an infrastructure provider to work with banks who want to enable themselves to do something different or improve their business. If you think about it as disruption, like Uber running into the taxi lobby or the taxi unions, that's the false comparison, right? This is very different and much more collaborative than you would imagine.
I mean, the banks are being definitely disrupted by fintech, by messengers, by the new economy. But DLT, in our opinion, is not disrupting banks just yet. Until we can tokenize securities and until we can tokenize fiat properly, we will not see new business models, right? So DLT helps us to reduce risk, to improve inefficiencies. But the banking products are still the traditional banking products, right? When we put invoice factoring on blockchain, the bank is still involved. Now imagine when we have a stable coin, a nationally recognized stable coin, and when the invoice is matched, the stable coin is released by smart contract. The bank is not involved. That's where real disruption will come to banks. Until we see that, DLT is yet another database. It's yet another enabler for the banks. It's still just an instrument of efficiency.
I said 10 minutes for questions. We're down to 8 right now, but does anybody want to kick it off? I'm trying to look for the mic, sorry. Yeah, up here in front, sorry.
It's always on the opposite side of the room where the first question comes, so guaranteed.
Do you see, Mark, this specific question for you, do you see banks going through a lot of pain in terms from a regulatory perspective, like the Dodd-Frank and the Volcker, they went through so much of pain. So aren't they resisting this change to blockchain because of that? Because they spend so much money getting ready for it. And now again, a new technology, a new system. So do you see that?
And who's the you? Me or who?
Max, you.
Me, okay.
Yeah.
So I actually find that one of the least talked about and most important pieces of this technological toolkit is the way in which we use smart contract technology to enforce rules and regulations. It is RegTech. There are conferences about RegTech, right, all over the place, and yet very little conversation inside these walls of this kind of conference about this being RegTech. You can automate securities now to behave in a way in which deterministically prevents the people using them from breaking rules. So we actually talk a lot with our partners about seeing a future where compliance spend at least flattens off and potentially starts to tip in the other direction as people become more and more comfortable with the utilization of these tools and them acting as automated RegTech and restriction. I mean, a simple example is a Reg D private offering that has a 365-day requirement to hold. A smart contract can enforce that and ensure that you're compliant. So we see this as a huge boon for financial institutions to use as RegTech.
Thank you.
Mark, could you tell me about like what profit things like banks are missing, things that they could be taking advantage of in blockchain? And Lior, could you tell me about like how BNY Mellon is making money off of Bakkt?
Sure. So I think an easy example is if you think about what post-financial crisis happened with securitized products, RMBS and CMBS specifically, and how that's been dealt with over the past decade. That market has basically been crushed into submission, especially in the private label side. This new technology provides for an opportunity in which we can have federated trust, which doesn't really exist in that marketplace. We can add transparency to these instruments in a way in which was not possible before, so we can see the leverage in the system, which we were blind to before. And we can turn these into self-rating instruments because we can take the underlying data. If you take a payment system, let's say a mortgage payment system, and you were talking about mortgages, and as every payment is made by the mortgage holder, it's recorded on the blockchain, and it understands in which pool does that particular loan belong. And I can then, as an investor, look at my RMBS position and say, oh, I want to be informed by my smart contract when 3% of these loans are 30 days late or longer. And then I can make an educated decision on what to do with that instrument and how it should be priced. This provides for a huge opportunity for massive amounts of revenue and alpha that has left these institutions previously to come back in a way in which it's more safe. From a regulatory perspective, regulators can participate in this kind of thing, so your compliance spend can decrease, so you've got efficiency and alpha simultaneously in an instrument which we thought we may have lost.
Yeah, and to your question, that's pretty boring. It's just fees. You know, it's cold cold storage, so you know the fees are associated with that. But so to Mark's point, I mean, this is, you know, this whole set of capabilities. This is not something that we currently include in our fee structure, right? So you know, like how should that tie into that? How should we charge you know, that thing, and how should the fees be designed around it? Those are all questions that kind of, you know, we still need to figure out.
Well, I mean, if you talk about fees, right? For example, if you keep track of securities in a centralized depository, it charges you fees on notional, sometimes 1 or 2 basis points. Now imagine you can do the same, but build a network of depositories, a network of banks, and keep track and store securities decentralized, fully decentralized. There are no fees. It's only your technical risk and your technical investment, right? And this could run into tens of millions of dollars per bank, just in fees, saved fees.
Yeah, so the question is for Oleg and Lawyer. You guys are in the blockchain laboratory. Can you touch more detail on what kind of experiments you are making in your laboratory? And also, what would be like 1, 2, 3 potential first real impact of those projects on the banking industry?
Sure. Most of the projects and products that we build, low-hanging fruit, something that you probably heard about already. Invoice factoring, or mortgages on blockchain, or commercial paper, repo. Basically, your traditional banking products or traditional instruments, but done on DLT. The impact that we see in particular is the one that I mentioned. For example, storing mortgage securities in a decentralized depository, right? So impact there is immediate. Those are the fees that the bank saves not paying central depository.
So my question is, how about global payment? Does blockchain or DLT has helped global payment in significant value, or?
It has helped, but I mean, when you think about global payments, you have to think about SWIFT. And as much as we like it or not, SWIFT has the network, and the value is in the network. I mean, you can see small improvements towards the payment process by bringing blockchain or more DLT-based solutions. But again, the issue that we are facing here is how do you build a network of correspondent banks so you can send US dollars to China? If you don't have that, then you don't have nothing. You can have a great DLT platform that can solve having all the payment information in what ledger, but actually you have to have a correspondent bank account sitting in China having US dollars so you can settle your payment. If you don't have your network, you don't have much, and SWIFT has the control of that. So again, coming to one example, I think that instead of thinking we are going to completely revamp the payment systems and create a new payment network that we can leverage through DLT, we have to make small improvements. Coming again to a Corda example and Corda Settler, there's a great way to connect Corda-based smart contracts and settle them through Corda Settler through Swift GPI. So that's well, not a small, that's a great effort from Corda that makes a great improvement towards the payment process. Swift is going nowhere as much as we would like to be completely replaced by something else. Swift is here to stay.
Yep.
Hi, so GPM issued its coin as a way to deal with the payment lag. I'm interested what you guys think about this trend to continuing and whether banks will start doing it.
For which? What was it?
Can you repeat that? Sorry.
I didn't.
JP Morgan issued its
yeah.
own coin, and I'm interested on what you guys think about that and whether other banks will follow suit.
Look, I mean, I'm so surprised there's so much fervor around these things. This is just PayPal, V2, right? These are omnibus accounts with seg accounts that are being digitized and moved. There's nothing magical about this. There's nothing interesting about it, right? It decreases friction. But if you don't have a JP Morgan account, you can't use JP Morgan coin. So you need to then have a deposit there like you would put a deposit at any bank, and then you get a representation of your money like you do digitally. This just happens to sit on a ledger.
It lets you program this money, right?
No. You can move it. You can move the money, but you don't program it. Like I can't make that dollar do anything other than go from me to you and back.
On a condition that satisfies smart contract.
But the smart contract does that, not the coin.
That
Right?
is
That's the
correct.
difference. The smart contract instructs a coin.
settles.
Right.
So
So
it settles between two JP Morgan accounts.
yeah, which is no different than what PayPal's been doing, moving money inside seg accounts for how many years now? I mean, all of these are basically the same. The idea they're even called stable coins seems silly. This is just a digital version in a different fashion of a bank account that you have, right, that gets moved around a ledger.
When central banks start issuing coins.
That's
that
now that is a whole different conversation, right?
That's
the
where
panacea,
disruption
right?
will come.
That's the panacea.
Okay,
That
Jorge,
solves
one
the
comment. We need to
problem.
wrap.
One comment. The important thing is not the coin, it's the technology.
Okay. Central bank-backed stablecoins for the next conversation. Thanks so much to my panel. Thanks to all of you for joining. I don't know if these guys are sticking around, but if you have more questions, you can try to catch them off stage. Thanks, you guys.